Hello everyone and welcome to session 4 of Schwab Coaching's New to Investing series. My name is Alex Coffey and I'm a senior trading and derivative strategist here at Charles Schwab. I'm also the host of Next Gen Investing on the Schwab Network. For those who aren't familiar with Schwab Network, it is produced by Charles Schwab Media Productions and it is a separate but affiliated subsidiary of the Charles Schwab Corporation. I should also mention at this time, this will be a moderated discussion and that my colleague Ben Watson, I actually should say the world famous Ben Watson, is in the YouTube chat and he'll be there to answer any questions for those who are watching us live. The goal of today's session is to discuss how an investing idea can turn into an investment. And so before we get into the presentation, there's a few housekeeping items that we must attend to. Today's discussion is for general informational and educational purposes only. Nothing we discuss today should be considered individualized investment advice. Investing involves risk, including the possible loss of principal. And the platform we show today is going to be the Schwab.com platform. We're going to be operating in a demo experience. Now, the account we'll look at won't actually have any funds in it at all. If it did, it would have been paper money. And the functionality, the data, the experience on that demo platform, it can differ from a live trading experience. All right, so as I mentioned, this is session 4. Well, it's session 4 of 8. So this is an 8-part new to investing series that was designed to take new investors from the basics to ultimately building long-term investing habits. So today's session is going to focus on moving from learning about investing to actually potentially taking action to take those investment ideas, as I said, into and turning them into potential investments. In session 1, we covered the importance of starting early and the power of compounding. So the analogy we use for that one is picture at the very beginning of rolling a snowball down a snowy hill, it starts as a very small ball, but as it picks up more and more snow on its way down over time, it compounds and grows into a much bigger snowball. So that's a good visual for the idea of compounding and compound interest when it comes to investment in the stock market. In session 2, we took a step backwards and we said, okay, well, we know investing and the goals of that from session 1, but where does that actually happen? What does that mean? And we talked about, what the stock market broadly is, what stocks are and what they represent. And of course, that is ownership in businesses. And we talked about how they can go up or down, and that appreciation when stocks go up is one way that those investments can grow into larger investments. And then finally, last week, we introduced the Schwab.com platform, the web experience, as a way to show, one, where some of this starts to happen, but also how it could be used for research into potential investing ideas. And we ended by building a watch list. So today is going to build on that foundation by walking through the next step, which would ultimately be making that investment decision and how that could happen. So our agenda for today, we already kind of covered that series overview. So we quickly recapped lessons 1, 2, and 3, and I kind of set the stage for today. And I should note that for those who weren't able to watch those sessions live, they are available on demand on the Schwab Trader Talks YouTube channel under the New to Investing playlist. So the same channel you're watching here in real time, the sessions 1, 2, and 3 are archived and available underneath that playlist. For the rest of the presentation, though, we're going to operate within the Schwab.com web demo experience and walk through how an investing idea could ultimately become an investment. So let's go ahead and we'll pull up that web experience and we'll pick up where we left off. And so where we left off last week was by building a watch list. And so we can go to that watch list and pull it back up by going to research and then going to watch list. And research, when I say that, I mean the top middle of our screen. It's the third tab available on the Schwab.com web experience. We would click that. It'll pull up a drop-down menu, and then in the third column, it'll say watch list as a third sub-column there. We'll go ahead and click there. So as that loads and it populates for us, it should and it has populated our new to investing watch list. So this was a watch list that we made live in session 3 last week. And so what you'll see is it says new to investing here and it has some of the names that we discussed, but let's say it didn't populate and we wanted to find that watch list. If it didn't pull it up automatically, we could go to this drop down right here where it says new to investing, and it would be listed there, assuming we actually have previously made a watch list to select. So in our case, it did pull it up, and we have the 2 companies that we used for our educational discussion last week. And those 2 companies were Apple and Nike. Now these are 2 extremely recognizable brands, and they're businesses that we largely, I feel like as a group here, understand and are familiar with. And so, of course, Apple makes the iPhone, it makes MacBooks, makes AirPods, things that many people interact with and use on a daily basis. Nike makes footwear, athletic wear. It's one of the most recognizable brand and logos that there is. You know, sponsors tons of famous athletes and people across the world. So both companies, long-standing histories, both very recognizable. So that was really the crux of why those 2 came to the discussion point. But it should be noted that while they're both recognizable and they're both maybe even businesses we operate with and within and use their products on a daily basis, the 2 companies have gone in drastically different ways in terms of stock price over the last 5 to 10 years. And so this is where this can be kind of fun for this discussion, is where these ideas start to become potential investments. And this is all, of course, just for discussion purposes. But, you know, I think it was even Warren Buffett who said, you know, invest in things you know. So a lot of times investment ideas can spur from our everyday experiences. And so that's why I use those 2 for this discussion example. But again, this is only a starting point. And so as we look into these further and we do a little bit more research, that can help us build confidence before we ultimately make an investment decision. And so as we go all the way back to session 2, just briefly, we remember that owning a stock means owning that small piece in a company. And so, you know, sort of 3 quick gut check questions could be, 1, what does this company do? Do I understand what this company does? Another one might be, you know, if we're having this discussion with ourselves or with friends or family, you know, could I explain why, or answer the question, why would this company grow over time? And then maybe the third one would be, would I be comfortable owning it, knowing that the prices are likely to move around and they may even move against me? And so we'll continue from our example last week, and we'll stay in this platform here. And one thing that we can do is just click on Apple from here. And it'll pull up our quote screen. We click that. It'll bring us up into our research tools screen. Now, it populated another tab, so if we didn't want to do that, what we could simply do is just go up to research. We can click US markets here. And we could key in Apple. Now, it still remembers that we looked at Apple just a second ago, but key in Apple and then click, and then it'll populate it. So say we were looking at this and we wanted to kind of go through our quick gut check questions and say, you know, do we know what Apple does? Well, the nice thing about here on this screen is that we can scroll and we can find the company profile section for this company, which is down over to the right here. Click Show More. And we can get a business summary written out of what this company does. So we can relatively comfortably come away from going through this and know what the company does. So at least for the first gut check question, it's just relatively a factual one. So we can go through and we can answer that. Now for the second and third questions, those are a little bit too, you know, those are too personal, right? They're going to be a little bit too individualized for us to ultimately answer that here. But Let's say that we've gone through this exercise or whatever that process that you at home decides works for you for your investment decisions, and that we've determined we want to buy Apple stock and that we want to actually go through that process. And so let's go ahead and start going through what that might look like on the platform, what that experience could involve. So we would go up to trade. That would be one way to do it. There's several ways, but we'll do the kind of the most standard way here. And you can click all-in-one trade ticket. You can click stocks and ETFs. We'll just go ahead and click all-in-one trade ticket here. And it's going to populate the all-in-one trade ticket. And so that's now on our screen here. Now you're going to see that we have a recently searched symbol in Apple. So we could simply just click that and it will populate Apple. But let's say we didn't. We just knew that Apple was the symbol. We could come in here and we could start typing in its call letters, AAPL. Or let's say we didn't even know its call letters and we just knew it was Apple. Now you can't just type Apple and hit enter, but it will bring up a drop-down menu here, and we can select Apple Incorporated from that drop-down. So now it's populated it here, and there's a lot of information here on this screen related to its price. Now Apple, and we should note, the market closed at the top of the hour, and so at this point, we know what Apple did so far on the day and where it closed. And so the market being closed right now, Apple was up 88 basis points or 0.88%, and it closed at 316.16. So that's how much at the close today one share of Apple was worth. And so we're on the screen now. We have it pulled up. We're in the process of potentially building out a Apple purchase here of its stock shares. But there's a few more questions that we need to answer before we can click that button with confidence. And the first one is, how much do you want to invest? And how much should you invest? And that's, again, of course, a very individualized question. And the answer is going to be different because everyone's financial picture is unique and it's personal to them. But there's nothing really I can say that's going to say it's a one-size-fits-all answer. What I can say is, though, there's nothing wrong with starting with the small amount. And the nice thing about what Schwab.com allows us to do is it actually allows us to invest in fractional shares. So rather than simply choosing a set number of shares, like in this case, one share in Apple is $316, we could actually elect to purchase a US dollar amount. And even if that correlated to less than one share, we would be able to still do that using the Schwab.com platform. And so that first question is going to be, how much do we want to invest? And then I guess the next question would be, how do we want to go about doing that? What order type do we want to do? Because one of the things they don't tell you, at least when you're first learning about this, is there's a lot of different ways to actually interact with the market itself. And so when we have our screen up here, the really nice thing about the Schwab.com platform is that it has plenty of tooltips in areas where if you have questions, they're already there embedded with the answer. And so when we go to the order type, what you'll see is there's a blue bubble with a little I within that, and that kind of stands for information. And if you click that, you'll get a little bit more information. And so it pops it up here. And so what we're going to do is we're going to expand two, and these are the ones that we're going to focus on here for our discussion topic, is they're the two most commonly used order types for entering and buying that first investment. And so those two order types are market and limit. And so you can see the description there on the screen, but one of the things that might be most simple to explain the differences between these two is thinking about what they prioritize. In the case of a market order, it's seeking to just buy at whatever the available price is, the best available price is when that order reaches the marketplace. And so it prioritizes the speed of the execution over the price. And so because we're talking about two different orders, it doesn't take a ton to deduce that limit is probably a little bit different, and it is. And so limit, instead of just saying I want to buy this much and just give me the best price you can, the limit order says I want to buy this much, but only at this price or better per share. And so this allows the potential investor to be a little bit more selective in its price. And so with this, you're prioritizing price over speed, as it's potentially possible, depending on the price you choose, that you may never actually see the stock go to that price. And so the execution is not guaranteed in either one of these, but definitely not in the limit order, especially if you put that limit order at a price that was below where the stock is right now. And so as we kind of go through this discussion, one thing that we'll again remind is we don't actually have any money in this demo platform, but say we did, and say that we went through this and the market wasn't closed, and we determined that we wanted to buy $1,000 of Apple stock, and that we were comfortable at that market price. And so we wanted to prioritize, in this particular instance, the execution of the order, the fill of the order, over the selected price. Maybe we wanted to hold this potential $1,000 purchase of Apple for 10, 15, 20 years. And of course, this is just for education. It's not a recommendation to buy this stock or any others. But say that was for our educational discussion, that was the scenario. And so how we would actually go about doing that would be starting, we have the symbol selected, so Apple's already there. We would go into action and we'd select buy. And so you'll see that starts to populate. And then we'll see unit, and it'll give us a choice between shares. So this would be specifying the number of shares of Apple you'd want to buy, or we can select dollars. And so say we selected dollars, we then could go into the amount and we could type 1,000. And the nice thing is it does a math for us. So that's going to be an estimated quantity in shares of 3.1657. So rather than us having to figure that out and type it out, we can just type in $1,000, and ultimately it will do its best to get as close to that number as it can based off those market prices. And so say we double checked it, everything looks good, this is what we decided we wanted to do. We would then be able to go down here to the bottom right and click review order. And so from here, it would populate in the typical scenario, give you all these details and determine whether or not this is, it all looks good. So again, we wanted to buy 1,000 shares of Apple at the market. Well, that's what it says here on the screen. If we had the money available, which in this case we do not, it would allow us to hit place order if everything looked good, and then it would send that order off. And so from there, let's say we did that, it was filled, it would actually then show up, kind of coming full circle to where we began last week, underneath the accounts position screen. Now again, we've just done this hypothetically, but if it did, it would pop up here under position details, and you would have that 3 and some fractional shares amount of Apple, and it would tell you the price you had it at, and you'd have all this information, and this would be the screen that we could look at to monitor that position. Now, before we end today's discussion, I think it's important to highlight a couple, kind of relatively common investor hurdles. First, and this is an important one, this is one that we all struggle with, is there's not really a perfect moment to invest. And, we don't have the benefit of hindsight where everything, obvious, it looks so obvious and it's so clear when we look back on the chart, like, why didn't we buy here? Look, it, went down, went straight up from there. Well, because in that time you didn't have, what was going to happen yet. And so, just knowing that deep down that there's not a perfect moment, and it just comes down to whether or not it meets your goals at that moment. Now, second, it's also very easy to get caught up in noise, especially short term around headlines and all the things that are going on in the world. But if you're a long-term investor, that noise can often be just that, and noise. And we talked a little bit last week, and I'll even pull it up real quick before we go. Taking a look at Apple again, we can look at the chart of Apple over time, and we'll go ahead and hit show more here. And it's got, a 1-year daily chart. Well, the stock has gone up and down around news, but at least over this last year, in the case of Apple, it's largely gone up. And if you reacted to every time something negative came out, maybe you wouldn't have been invested throughout that run that this stock has been on. And lastly, the last hurdle that I want to discuss is, putting too many eggs in one basket. And so this comes down to that discussion around how much to invest, how much not to invest. And while concentrating can potentially be rewarding, it does also introduce a different and in some ways more risk. And so that's going to be our discussion topic for next week's session, which is going to focus on diversification. And so for that, we'll leave it there, and we appreciate everybody for tuning in. Thanks again for joining us today, and we'll see you here next time.